All right, let's head back to the markets now and welcome in Darrell Cronk. He is president of the Wells Fargo Investment Institute. Darrell, good to see you again. So we're starting out on the plus side here this morning, but what's your overall take on the market action you've seen thus far this week? Here we are midweek.
Yeah, morning, Alexa. Good to be back with you. It's been really strong. I mean, the rally continues. This is the fourth straight day in a row that we've pushed higher. We are just above some pretty key technical support levels. So we're above the 20-day by a little ways, above the 200-day moving average by a little ways, and also above the 50-day moving average. Those are starting to converge. So I think the next week or week and a half here of trading will really tell us the next major direction that markets take.
All right, Jared, let's get an early check with you now of what's driving us higher this morning.
I'm looking at the NASDAQ 100 here. We're seeing some strength in semiconductors and some broad weakness in a lot of the travel sectors. I'd also say that value is not doing too well either, and we're seeing that reflected in energy and the financials. Crude oil is off a little bit ahead of the Department of Energy report that we're going to get in about an hour here. You can see in the Dow here, we have mostly green. I think notably Chevron and Exxon are in the red, along with some health names. Industrials a little bit weak with Boeing off. Overall, though, biotech is doing well, and we do have healthcare outperforming. So here's a look at our sectors. We got materials, discretionary, tech, staples, healthcare, all outperforming to the downside. We got energy, utilities, real estate, financials, and industrials. Those are lagging. And just looking at some of our different sectors, mentioned financials before, most of those slightly in the green in terms of the big banks, except for Wells Fargo. Looking at our energy trade, lots of red there. Whiting Petroleum, the bankrupt stock, off another 6%. But looking at travel, now we did have some missteps yesterday after the bell when, Norwegian Cruise Lines announced that they're going to be extending their cruise furlough through September of this year. And then just taking a look at our software stocks, largely in the green, except for Oracle, which disappointed on revenue yesterday after the bell, Alexis.
Hey, Jared, I also want to ask you about PG&E, the California utility. I know the CEO yesterday said that the company was responsible for the deaths caused by faulty wiring at the utility. And they're also now, looks like they're going to emerge from bankruptcy. So what's that stock doing this morning?
The stock is up about 1% here to $11.13. And yes, this is a historical first. The fires killed 84 people. They're pleading guilty to manslaughter, along with an 85th count of unlawfully causing a fire. But yes, the judge has approved their plan to emerge from bankruptcy. It's a $59 billion plan. And on Wall Street, they're also moving forward with plans to sell bonds to fund their restructuring. But the problem is, if we have another wildfire season like the one that we had in years past, and this is according to several experts, they could easily be back in bankruptcy without batting an eyelash, Alexis.
Darrell, what we're seeing in the markets, is it nothing more than a bear market rally?
So far, it hasn't been. I mean, we have come off the March 23rd lows solidly, Brian, and really never looked back. I think there is some concern that we haven't had that retracement that you get normally coming off of major market lows. We've reclaimed 75%, of the gains coming off the March 23rd lows. History tells you normally you get some type of a 10, 15, maybe 20 retracement in. We haven't seen it so far. The economic data continues to improve. And buyers are still somewhat sitting on large amounts of cash in money markets, and sentiment is still fairly negative. So those are both bullish signs in the near term for markets to probably go higher.
Darrell, what do you make of the economic data we're getting this week? Retail sales rebounding from a record low, housing starts rebounding from a record low, but don't we have to consider from whence we came, right? I mean, they're bouncing back from horrific numbers. So how strong or believable is this economic recovery?
Well, I think you make an excellent point, Alexis, and it's underappreciated in the media and people that went through it. So take retail sales, for example. Best single monthly print at 17.7% yesterday. If you look at actually year over year, retail sales are still down 6%. And the second quarter of the year, consumer spending is likely down something with a 30% number in front of it. So, the momentum is clearly higher, but the absolute levels of economic data are still very weak. We still think Q2 is the weakest quarter, and you get that payback and resurgence in Q3. The back half economically looks better for us, but Q2 data is going to be ugly.
Darrell, playing off what Alexis just said, data is improving. We've seen a lot of reports the past few weeks of better than expected results. And to your point, if we do get that resurgence in economic growth in the third quarter, what would that mean to the president's reelection bid? And if President Trump is reelected, what do you think that would mean for the markets?
Well, right now, I still think the market is the base case is still pricing in a reelection of President Trump. But certainly those odds have been declining over the last several weeks as former Vice President Biden polls numbers go higher. I think the markets would be most concerned, Brian, of kind of what they call a blue wave, where not just the executive branch goes Democratic, but certainly the Senate swings as well. And I think why they would be concerned of that mostly is because it would put in jeopardy the 2007 Tax Reform Act. So we know corporate tax rates today are about, the effective rate's about 22% on the S&P 500. There's discussions that, certainly the Democrats would like to repeal that legislation and bring those tax rates back up to somewhere around 28-29%, which would be pre-2017 levels. That would certainly challenge margins and earnings growth in an environment where it's already challenged. So I think markets would have some concern about that.
What would a Biden presidency mean, though, to these markets at this point, Darrell?
It might put some downward pressure and take a little bit of the momentum out, we think, Alexis. I think if you get underneath just the broad indices, probably the most challenging sectors for a Biden presidency would be energy, as they would want to move away from certainly fracking or drilling on government lands and take more of a green stance, which I think we'd all agree is a great stance to take, but it would put pressure on the energy sector. We also think it would probably put some pressure on the healthcare sector in the near term. The Democrats have been a little more outspoken about wanting to tackle prescription drugs, Medicare for all. And then lastly, it probably puts some pressure on financials as well. They've already had substantial pressure, but there is concern that a lot of the regulation rollback done under the Trump administration would be put back in place, similar to the Obama administration, which would create some more headwinds for financials.
Darrell, I think a key point here is a Biden presidency a job creating machine? Does it create enough jobs to pull us out of the recession we're in now?
I'm not sure that, I think it's a good question, Brian. I'm not sure that the presidency matters as much as just the overall kind of policies. I think the key point here is even if the presidency swings, and let's just say the Senate swings from Republican to Democrat, the challenge is you're still going to have a very slim margin there. So some of the more progressive policies may have trouble getting through Congress. We think to get back to the job gains we were enjoying, or the level of employment in January and February here of 2020, pre-pandemic and pre-recession, you have to go out to 2022 probably at least. And some of your government agencies like the Congressional Budget Office or certainly the IMF or the OECD are saying it could take years to get back to the prior peaks of employment.
We're going to have Jay Powell, Fed chair, back testifying before lawmakers in about 20 minutes from now. You heard his comments yesterday. It seems like he's pushing the government to continue with more stimulus, fiscal stimulus. Do you believe that is what we should be doing right now? Or should we be instead focusing those monies on getting people back to work, incentivizing them to get back to work?
I do think it's a great point, Alexis. I think there will be another fiscal stimulus plan. It will be focused around probably three areas. One is aid to state and local governments. Second is an extension of unemployment benefits. And the third is kind of a refunding or another funding of the PPP program through the SBA directed at small business. We think it's probably somewhere around $1 trillion to $1.25 trillion. I don't think the infrastructure plan has much legs that was proposed earlier this week by the administration. He is tiring of bigger spending plans already. And I doubt the Democrats will want to give the current administration a win heading into the November elections with an infrastructure package. So even though there's a lot of discussion, and there's certainly need for that, I'm not sure that will probably take place. Chair Powell, though, is standing up these programs, Main Street lending and then the secondary corporate credit program to purchase corporate bonds 85 days later after it was announced. So there's a lot of firepower and ammunition there for the Fed to buy corporate bonds. 250 billion is that program. Year to date so far, they've only bought 5.5 billion of ETFs in the other program as well. So there's a lot of firepower the Fed can still throw back at markets if needed.
Yep, we'll see what they have up their sleeve. Darrell Cronk, president of Wells Fargo Investment Institute. Thanks so much for being with us this morning.
Alexis.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.